Hello and welcome to this brand new episode of Smart Money. In today's day and age of artificial intelligence, quantum computing, hyper-automation and industry cloud platforms, it is important to stay relevant with your investments too. So today we talk about innovation in investing, why innovation is important and what are the different kinds of innovation you need to know about in 2023. Joining us on the show is Anish Tawakley, who's the Deputy CIO-Equity and Head of Research at ICICI Prudential, to talk about how to invest in a prudent manner in this world which is seeing a rapid technological changes. Anish, thanks a lot for joining in. You know, at the onset, I wanted to ask you about what exactly is innovation in investing?
So innovation deals with all the changes that are taking place around us, right? And very often we think of innovation as being synonymous with technology, but that's not all innovation is about. I mean, obviously there's innovation in technology. We've all seen the world when we moved from, say, LP players to tape recorders and now, audio on demand. But actually innovation is much broader than that. Innovation is practically taking place in every industry. So for example, if you looked at airlines, the world has changed with the innovation that low-cost, no-frills carriers brought in, right? If you looked at banking, we all used to go to branches to collect cash. Today we collect cash through ATMs and we don't even need cash because we've moved to other digital forms of payment.
I don't even remember the last time I went to a bank branch, to be honest. And, the other day I was trying to recall, where did I keep my passbook? I needed it for some reason to change some data on the Aadhaar card, but I couldn't even find that. So I get your point. I mean, things are changing rapidly.
Very rapidly. So innovation actually takes place across industries, right? And typically, like, where does it become relevant in investing? What you find, right, broadly you can group in any sector, right? You can group companies into companies that are struggling and there are companies that are winning market share, right? The winners are ones who are gaining market share and doing it profitably. They're typically doing it based on some innovation, right? So if you looked at the banking industry, banks that were better at expanding the ATM network, better at launching better internet platforms, mobile platforms, gained market share. Similarly, the no-frills carriers we talked about, right? Today, modern retailers are gaining market share. So typically in any industry, the market share gainers and the ones who are innovating. Obviously, there are some exceptions like commodities, there's very little innovation. But in most industries, other industries, you find innovative companies gaining market share. And if you enter these companies at the right time, at a reasonable valuation, then you end up creating wealth.
So that's the million-dollar question, right? How do you figure out which is the innovation that you need to latch on to and when to enter? So first, let's talk about sectors like technology, where there's massive innovation happening. Also sectors like healthcare. What are the different kinds of innovation that's happening in these two sectors?
Well, you said healthcare and?
Technology.
Technology. Well, technology, it's really all over the place, right? Everything that you needed to sit on your PC for is now being delivered on your phones, right? Your phone has more computing power than most PCs would have had when they were first launched. So technology, it's a no-brainer, right? It's phenomenal. In healthcare, actually the delivery, like the way technology is being used both for diagnosis, for increasing access, and then for treatments, right? The treatments that are available today are obviously far more advanced than treatments that were available earlier. So obviously something has changed, right? The machines that are delivering them are superior, et cetera, et cetera. Similarly, the drugs, right? The drugs that are available today are all innovative drugs. In fact, the entire pharma industry, the prescription, the non-generic part of it is innovative. So, I mean, in both these industries, there's phenomenal innovation, actually, at every step of the way.
So, how do you decide, right? I mean, we have a very helpful plate coming up in a bit on what is the innovation, different kinds of innovation in IT, different kinds of innovation in healthcare. So, for example, in healthcare, right, I mean, you have API, formulations, generics. Now, in biosimilars, a lot is being done. Now, we know the listed players that have exposure here. But how do you decide how much of your portfolio goes into these companies which are innovating? Because trends are changing by the hour, forget about by the year. How do you decide how much exposure to have?
See, well, you always have to balance the opportunities that are available in the value space and then in the quality and growth space, right? So 2 years back, right, we thought all the opportunities were in the value space. Today, I think opportunities are more evenly distributed, right? So how do you decide is really based on what are the valuations and what is the market expecting. So it's actually good to, when you think of investing in innovative companies, right? It's not just the multiple that matters. You also have to say what are the market's expectations. Typically, you do well in investing in these companies when these companies beat expectations, when expectations are raised, right? It's not a matter of saying, look, 30 is a good multiple and 40 is not a good multiple. If a company is at 30 times but it misses earnings, disappoints, it's going to do badly. If a company is at 40 times and it beats earnings, it's going to do well. And therefore, it's good. It's very important to have a real good grip on whether the business model will succeed or not, and what is its potential for delivery if it succeeds. If your expectations are outrageous, then even if it succeeds, you won't make money.
Absolutely.
Right.
Okay. So, you were briefly mentioning banking. I want to take that discussion forward. Do you have any stats of how much the deposit market share of private banks has risen over the past many years, right, compared to PSUs because of the whole digital and technological innovation that we've seen with private banks?
Yeah. So, I mean, there's very good data, available on this. And you can see that the private banks basically have gained share from the public sector banks. And the reasons they did it were because they were able to, they use technology more. They use technology both to reduce the cost of service and to improve the quality of service, right? So this whole notion of targeting the more affluent customers with relationship managers, right, who had with them technology at their disposal, which helps them deliver better service. The whole notion of sort of not having the customers go to the branch but be served without having the need for large branches or branch staff, serviced at least, has been what is driving these market share growth. And it's very clear that these banks have innovated more and have gained market share pretty substantially. Right?
Okay. In fact, we have a very helpful table there, on what the innovation has been, what the impact of innovation has been on private sector banking versus PSUs. So PSUs have lost a lot of market share. There we have a helpful table on the screen. So way back in 2018, I think the PSU market share was about 50%, and now it's come down to, almost 35% or so. And private sector banks has picked up. But the question that we're asking now, Anish, is that, a lot of this is perhaps in the price, you think? Because a well-known story that a lot of these banks, whether it's ICICI Bank, HDFC Bank, Kotak, are doing a lot in digital lending, lot in digital banking. Has this innovation been priced into these stocks, you think?
See, with banks, banks are a cyclical industry, so it's difficult to say what's the right price unless you have a view on the cycle. And I wouldn't want to comment on the valuations of specific banks, but broadly we are positively, we view the Indian economy as well positioned from a cyclical perspective. So there should be opportunities broadly in the financial services space, not just banks.
Okay, okay.
Yeah.
So coming back to the different types of innovation, just trying to understand, what else is out there. There are several sectors, right? I mean, we spoke about some of them, whether it's airlines, banking, but now there are new age sectors coming through where there's a lot of innovation happening. Since you have a fund as well, you're investing in this space, tell us about the different types of innovation that we're looking at.
Oh, so to your point, right, starting out, there's a phenomenal amount of radical innovation that is taking place in this space, right? Who would have thought of electric vehicles a few years back, or who would have thought of new age energy sources, right? Some time back, we thought of solar energy as something that, it's part of the hippie culture where, if you're out of the mainstream, you talk about these kind of things. Right, all of that is now happening as we speak, and it's actually penetrating our homes. Right, the amount of soon we'll be using solar energy, or we maybe already be using solar energy in our homes without actually realizing it. Right, so there's electric vehicles, there's new energy sources, there's the energy field is energy and transportation is seeing phenomenal.
That's largely radical innovation.
Radical
right?
innovation, yeah.
Okay.
But then you have people coming up with new business models, right?
Yeah.
Which is using existing technology, but delivering it in a certain different way.
So that's
for
disruptive.
example, disruptive or incremental, both,
okay.
right? Disruptive and incremental, both. So, for example, and it's almost very often difficult to categorize it, right? If innovation is successful, it may seem small, but it causes a lot of disruption, right? When we moved from phones as primarily a voice device where you paid for voice to when voice is free, you would have thought it's a small change in the pricing model. But the amount of disruption it's caused is phenomenal.
Yeah.
Right? So disruption, whether it's radical or the amount of disruption it causes is often only known with hindsight, right? But the point is, innovation can take place either in fundamentally new products or delivering similar products in a different way, right? Which enhances the value, which makes them easier to access, or using different processes, right, to deliver those products. So, frankly, Sonia, it's beyond a point not really meaningful to say whether it's going to be disruptive or not. Every company tries to be disruptive. You have to look at it as things are happening and saying, look, are the changes that are, is these companies being able to translate this innovation into market share gains and are able to do it profitably? Because if a company is able to translate its innovation into market share gains profitably, then it's earning the right to grow and it's winning in the marketplace. That's what you need to look for.
So do you want to share some examples with us? Maybe not, I mean, in the listed space. These are not recommendations, of course, but examples of companies that have successfully, made that transition.
I wouldn't want to take names, but yeah, low-cost carriers made that transition.
Okay.
Let's take examples of industries where initially you had innovations that were unsuccessful, and then now we are having a spate of innovations that are successful. Initially, a lot of people came into retailing, right? Modern retailing. You had a lot of blow-ups there. But now you have companies doing modern retailing, doing it successfully and profitably. What's the difference? The difference is that the first generation of modern retailers, right, thought of retailing as just the stores. So it was a real estate game, right? Let's open as many stores as possible in convenient locations. But in retailing, actually, the store is just one end of the business, right? Yeah. It's not the entire business. Retailing is not just about stores, it's about the entire supply chain, right? So a good retailer not just has good stores, but has a really efficient supply chain, controls the warehousing, has really good links with manufacturers which allow it to control the products that are supplied. So you were talking about how do you decide what's successful or not. You have to actually spend time to understand what is it that will allow this innovator to deliver better value or a distinctive experience to the customers. If you can convince yourselves of that, then you should take the story forward.
That's why folks like you are there, right? To do
hopefully we had
to do all the research and put it out there. But let's do one thing. Let's take a short commercial break. Very interesting conversation. Don't go anywhere. Come back in just a bit. We'll continue to talk about innovation in investing.